Australian dollar technical analysis for the upcoming October 19th session has us looking at the Tuesday candle. It's a bullish candle, but as you can see, the 103 area seems to continue to plague this pair to the upside, and we actually have 103 to 105 as resistance. The session was pretty wild. Originally, we had sold off as the Chinese GDP numbers came in at just, and I'm saying just in quotation marks, 9.1% versus a expected 9.3. This shows a little bit of a slowing in China, and Australia does supply China with much of its raw materials, so of course this affects the Aussie dollar. However, having said all of that, we rose later in the session based upon stories coming out of Europe that there was perhaps a $2 trillion bailout fund being supercharged into the EFSF, which of course was turned around and denied, so we fell later in the session. Looking at it from an hourly standpoint, you can see we got the spike, and shortly after that, we had given up almost all of those gains. So the day is a little misleading. It was positive, but it wasn't quite as positive as it looks. Because of this, we still look at the 103 area and this cluster as important, and we'd like to see a break to the downside, with parity, of course, being a stop, but we think that's the path of least resistance. However, having said all that, we can only wait to see if we get a break of the lows, or if we get a shorter term rally with perhaps weakness showing up near 103, could take an opportunity to short at that level as well.